premiums for women, first lower rates for non-smokers, even the first survivorship life policy. In fact, going back to the 20s through 1950, we were known as the retirement income company. We're probably most famously known as the carrier that insured and paid the claim on Abraham Lincoln. Also our building. This is our building. We're located in Hartford, Connecticut. Despite the name, the Phoenix Companies, we're a Connecticut-based organization. This is the building we had built on the banks of the Connecticut River. This is where I work normally. And this is innovative, too. We have the world's first two-sided building. When we took a look at launching our fixed index annuities product line and platform, it was back in 2008, and I think it's fair to say that there's one word that describes that whole period, and that is chaos. The markets were falling. Folks didn't know which end was up. So when we launched our product line, we also took a very innovative approach when launching that fixed index annuity platform. Number one, anybody who does business with us or represents our products in any sales fashion is covered by our own supplemental E&O coverage. There's nothing for you guys to fill out, no costs. If you do business with us, this E&O guards against insolvency of a carrier, namely us. So once again, we put that in place just knowing the chaotic market in 2008, but it is still in place today. Number two, to protect your clients, we are the only carrier that offers this, that the assets that come into our fixed index annuity suite come into a separate account. Okay, so not like normal carriers where they go into the general account and are at risk of the general creditors of the firm. These are in a separate, segregated account. So in both areas, we've added a superior level of protection. There's a great one-pager on our company that I can share with you after the call. It has, some of our key financials, $13 billion in reserves. We have a surplus of nearly $740 million. And what's also an interesting statistic, folks ask me for, what's your solvency ratio, or RBC, risk-based capital? And in a nutshell, that is, for every dollar of liabilities you have as a company, what do you have set aside? So our RBC ratio is just under 340. So that means for every dollar of liabilities, we have $3.40 set aside. So very strong financials and obviously long innovative history. Let's get into the product discussion. This is no new news to you, the risks that your clients are facing as a pre-retiree or a retiree. For me, it really comes down to they want to maintain a comfortable lifestyle, something that they're used to. And it's important to have those discussions with your clients about these risks, but it's more important to plan for it. And at Phoenix, we've come up with this four-corner offense in terms of planning for your client's retirement. Accumulation, I call it accumulation and protection, because just straight accumulation, they could be in a mutual fund, right? Income, Social Security, pensions, and guaranteed income through annuity sources. Family, my mom's 83, and she's starting to think about, well, what can I leave you kids? So this would be family or legacy issues to plan for. And finally, personal care. These would be items such as, what if, God forbid, somebody's confined to a nursing home? What products or solutions are in place to address that particular need? So we're really pleased to be working with FEG and your crusade to help Americans plan for retirement and supplement Social Security, supplement pensions if they have those things. We are very pleased to announce a very exclusive limited distribution product called Personal Retirement Choice. Not everybody has this. You guys do through your affiliation with Freedom Equity Group. And so, we talked about these four corners, right? We have a platform of products that's very methodical in the way that it's been laid out. They're very complementary offerings with very little overlap that allows you to point to and shoot to the right product depending on your client's needs. I'm going to go through three of these products today, starting with our Personal Retirement Choice. Brand new offering, only out a couple of weeks. We're getting a lot of activity on this. A lot of accounts are being opened up. And the sizzle on this product is a 15% premium bonus added day one to the account. That is the highest premium bonus in the marketplace today, head and shoulders above our next competitor. I'm going to talk about a personal income annuity, which is all about maximizing income for your clients. Two choices here, a 45% bonus on the income benefit base, or we offer a 14% simple roll-up to that benefit base. I'm going to share with you some really key sales ideas of how this can work for your client. And last but not least, our fastest growing product is Personal Protection Choice that offers 3 forms of protection all in one product. Guaranteed income, personal care if somebody's confined to a nursing home, and the best enhanced death benefit on the street today. So let's dig in to Personal Retirement Choice. Once again, this is all about accumulation, exclusive and limited distribution, and hot off the shelves from our actuaries. So let's go through some of the basics. Issue age 0 to 80. Premiums $15K on the low end, $1 million on the high end. I can get exceptions made on both ends. Obviously, we'd like to make exceptions of $1 million or more. And let me just explain. This is obviously our accumulation growth strategy. So there's 2 components to this. One, accumulation, right? So there's up to a 15% upfront bonus. There's 5 index accounts to help harness the upside potential of the market, plus a fixed account. And we have this optional income rider that your clients can choose. So if your clients are just interested in accumulation, I'm going to show you how that works. There is no charge for the product. If your client is looking for accumulation plus an optional income rider, it's 85 basis points. So let me describe how that works. If your client opts for the income rider, and say they have 100 grand just to keep it simple, on day 1, they're going to have 115,000 in their account. That 100, right, you have 100 grand plus 15% upfront bonus added to the account on day 1. That also creates the income benefit base. So you'll have 115,000 as an income benefit base, and that will roll up 8% simple for the 12 years with an option to restart that roll-up for another 12 years. So you've got the best upfront bonus on the marketplace today and a very strong optional income rider in case your client's interested in that and wants to turn income on down the road. Perfect example of this. I'm going to give you a couple illustrations here of how you can put this to work for you. So very simply, this is a person who is age 60. This is Anthony. To keep it simple, he's got 100 grand. He has 2 goals. He wants to accumulate money for retirement, right? Particularly with the market doing well, and I know the market has been volatile, but folks have been more cognizant and looking at their account values these days because markets have hit new highs. So he wants to do both. He wants to accumulate funds for retirement, he wants to protect those funds, and then he wants to turn an income stream on down the road. So let's look at some of the assumptions. He decides to go with both, accumulation and the income rider, and he's going to let this grow and then turn on the income when he turns 72. So just to show you, 15% upfront premium bonus, and when he turns on that income with that strong roll-up, he'd be looking at $12,284 per year for life, no matter what happens to the account due to the market. And I know, folks, rates have gone up a little bit, but essentially you've got the best bonus on the marketplace today, and in this particular case, a client turning on a 12.3% guaranteed income stream for as long as they live. So very, very strong income number as well. Let's just take a look at year 12. So he's 60. Let's look 12 years down the road. So he started with 100. Total guaranteed value, folks, that's just under the terms of the contract. Essentially, assuming 0 growth, this is a minimum, bare bones minimum, worst case scenario that your client would walk away with, and it's essentially 87.5% of the starting premium. However, let's look at the accumulation value, and in this particular case, the client is using one of our one-year point-to-point uncapped strategies on the S&P 500. So that 100,000 has grown to 151,484 with 0 downside risk of being in the market. So that's a pretty nice accumulation amount. As I mentioned, there's also an income rider. That benefit base rolling up at 8% at the 12th year is at $225,400. That's how he's getting at, right? That's how he's getting at that $12,284 is through the growth of the income benefit base. And let's just take a look. The 4th column here, this 4th bar, is taking a look at cumulative income, knowing that he's taking out that 12.3% per year. So at age 75, cumulative income of $49,136. Should he live to 85, $171,976 in cumulative guaranteed income that's coming out. And say he lives to an advanced age. He has good genes in his family. He lives to age 85, $294,816. Started with 100, has pulled out $294,816 in guaranteed income, nearly 3 times his premium that he started with. So once again, dynamite accumulation potential and equally as strong guaranteed income available through the Personal Retirement Choice exclusive distribution product. We also offer what's called a penalty-free withdrawal privilege. So this allows a client to get access to their account value should they need the assets. Okay, so there's also a way to use that. That's good for the client. It shows some flexibility, but we can also use that as a sales tool to get at an income stream without the client paying a fee. All right, so maybe your client says, you know what, I like this accumulation story. I don't want to pay the 85 basis points for the income. Show me a strategy. Okay, so you've got a client, age 65, $100,000, and instead of 15%, because there's no charge for this and they're not turning on the rider, the premium bonus drops to 12%. And we've selected just to split the assets between 2 of the uncapped strategies. And once again, the client's not paying a fee. All right, so let's use this penalty-free withdrawal privilege to create a cost-free 4% income stream for your client. Okay? So we take out $4,000 for 19 years. 4% withdrawals, 19 years. $76,000 is taken out of the account. They started with 100, right? 76% of the account is taken out through these 4% penalty-free. So you created an income stream. Let's see what the account would have accumulated to over those years. And in the 20th year, you'll see that $100,000, after taking out 76% of it, remains at $102,921. So I actually had an agent call this, you know what, this strategy, this is a mutual fund killer. You've got complete downside protection from the market. You've got the upside potential in being in 2 uncapped strategies. And by the way, you've created a 4% cost-free, penalty-free withdrawals that the client is deriving income from this particular account. So very strong strategy showing off accumulation and a cost-free way to get at a 4% income stream, and at the end of the day, have more money than you started with. Pretty strong story. Another way to look at this, say you have a client who is 69, they have $275,000 that they've rolled over, it's qualified money from the mutual fund account, right? And they want guaranteed income. They want to take out their RMDs, but they don't want to pay for a guaranteed income stream. All right, so what we do is we open up a Personal Retirement Choice account, and I simply used an online calculator for the 69-year-old when they turn 70. These would be their required minimum distributions under the IRS tax code. And you simply take those out through penalty-free withdrawals. And let's just say in the 10th year, they want to just take a look at what their account value would be after satisfying their RMDs. Well, that 275 RMDs taken out, that 275 through the accumulation strategies here would have grown to $318,399. That's $43,000 higher than they started, and they've taken out $88,000 more than that in RMDs. Once again, this is just showing you the flexibility of the product as well as the very strong accumulation potential, and here's a way to get at it with a zero cost to your end client. Just a quick look, we have 40 states approved. I just want to highlight, for those folks who are in Florida, we filed this in a very unique way. Normally, Floridians cannot get at such a high premium bonus, but we filed it in such a way that those that are 64 and under are allowed to get at this 15% premium bonus if they elect the income benefit. If they don't want to pay for the income benefit, it's going to be 12%. Those folks in Florida who are 65 and older, 8% premium bonus. And what we've done here, because it's a little bit lower premium, the higher ABA factors just means that the income is going to be a little bit higher as compared to somebody who's getting the 15% bonus. 12-year surrender charge in most states, and a 7% penalty-free withdrawal privilege. Okay, so that is our personal retirement choice, brand new, limited distribution product. I'm now going to take you through our flagship product, which is our personal income annuity. And you can see on the little grid here, this is all about maximizing income for your clients. It's available for clients age 0 through 85, single account, joint account, not qualified money, IRA rollovers, Roth IRAs are allowed in this product. What's great about this product is it's very simple in its intent to provide maximum income, and it's a very simple story to tell your clients. Income today or income tomorrow. So it's really about your client and when do they want to start taking their guaranteed income stream. If your clients are looking to turn on the income within the first 3 years, what we do is add a very high bonus to the income benefit base to then turbocharge the income that's taken out within those first 3 years. So as an example, if your client is age 60, and you know what, I need to take out money in year 1 immediately, we add a 30% bonus in year 1. If they're able to wait to year 2, we add a 37.5% bonus to that income base. And if we wait to year 3, a 45% bonus is added to the income base. Once again, that turbocharges that guaranteed income stream for your client. And I'll show you some examples. However, if your client is looking, you know what, I don't want to turn on the income right away. I'm going to turn on income in the 4th year or beyond. Income tomorrow is the strategy and the approach that I would recommend. And what we do there is it's a 14% simple roll-up to the benefit base. Okay? And obviously, the longer the client can delay, the higher the guaranteed income stream will be. And I always say that, you know, the proof is in the pudding here. In 2013, our actuaries made 2 significant enhancements to this product, particularly along with the income side. Caps are really good as well. A 1-year point-to-point on this product is at 4.5%, which is, you know, puts us in the top 2 or 3 in the industry today. And you're going to find, you know, the income is also higher from where we were last year. This also puts us in the top 2 or 3. So the combination between the two, great caps, stellar income, it's a combination that's very difficult to beat. So once again, income today, I'm going to give you some examples, commonly run quotes from our sales desk. Age 60, wants to turn on income right away. They'd be looking at this is all based on 100 grand, by the way. They'd be looking at $5,642 every year in perpetuity. That's 5.6%. Client age 63, waiting 2 years until they're 65, 6.8% guaranteed income stream for life. Client who's age 65, 5.6%, almost a 5.7% guaranteed income stream for life. The numbers get really stellar if they're able to delay and use the income tomorrow strategy. So here's a client age 60 with a 5-year wait, 7.9% guaranteed for life income. Age 65 with a 5-year wait, 8.7%, and somebody age 67 with a 5-year wait, 8.823%. So very, very strong income stream. Here's a look at our quoting tool. And this is available on our web portal, which you don't need a password. You do not need a login. You simply can just signify that you're a financial professional, and you can get in. And you can see we show both income in today and income tomorrow, so that you can have a dialogue with your client as to the trade-offs. So you can see the income benefit base here, right? 30% bonus, 37.5%, 45% bonus. Income strategy tomorrow, that's rolling up at 14% simple every single year, and you see the trade-off right here, where if your client's able to defer to the 4th year here, their income stream would be higher going with the income tomorrow strategy. But if your clients are looking to turn on income right away, this is a male age 65 with those high benefit bonuses in those first 3 years, really strong income there. Okay, so what I'm going to do now is pivot to 4 very unique sales strategies that you can use. Folks are using this today. They're generating business. And, you know, not every single client is going to use this strategy, or one of these strategies, but it opens their eyes to, number one, the flexibility of the product and the very, very strong income as a result of our enhancements in 2013. So I'm going to review for you the 4x4, the doubler, the RMD, required minimum distribution, and S cubed, the Social Security solver. So let's get started. By the way, it all comes down to, these four sales ideas come down to, for a personal income annuity, up to a 10% penalty-free withdrawal during the surrender charge period. Now remember, this is rolling up, right? The income tomorrow strategy is rolling up at 14% simple. We offer 10% penalty-free. So that, if you do the quick math, positive delta for your client with having this penalty-free withdrawal privilege. So let's look at the 4x4. This I thought of, my father-in-law is a retired state trooper, and he has a pension that can go up, it's correlated with inflation, and it can go up if inflation is up. So he, in essence, has a rising guaranteed income stream. So I thought, you know what would that look like if we did that with personal income annuity? So we have a male, age 65, $100,000, selects the income tomorrow strategy that has that 14% roll-up. We then use the penalty-free to start a 4% withdrawal. So 4,000 is 4% of 100, and we increase that every single year, 4% compounded. So we start with 4, increase that withdrawal 4% every single year, hence the 4x4. So in this particular case, in the 9th year, the client's taken out all this dough, 4x4, increasing income, and decides to turn on the guaranteed income stream. Well, he would be turning on a 6.97% GMWB, income stream for life, after taking out all this dough up front. So, and just to kind of put that in perspective, his last withdrawal under the penalty-free was $5,264, $5,264. Then he's turning on a $6,970 guaranteed income stream for life. That's a 32.4% increase from his last withdrawal. So very, very strong story. The next idea or strategy is called the doubler, also using personal income annuity. Now, I guess my question here would be, who wouldn't want to double their guaranteed income over time? So we have a male, age 68, $100,000, also using that income tomorrow strategy. And we start by taking out 4% withdrawals through the penalty-free. And we do that for 10 years. So in essence, $40,000 has been taken out through penalty-free, and we have a 4% yearly income stream. That's 40% of the starting premium. In the 11th year, the client decides to turn on their guaranteed income stream for life, $8,047. So you've gone from 4% to just slightly over 8. We've doubled the income using the penalty-free withdrawal privilege. Once again, highlighting flexibility and super strong income. Here's an idea that we call the RMD, and this relates to a client having qualified funds, qualified money that they're rolling over. In this particular case, it's a male who's age 70, has $275,000 in qualified assets, and maybe this particular client, has some money, and they don't need to start taking the income from this account, but they have to, because the IRS wants them to start taking their required minimum distributions. So using a very simple online RMD calculator, I figured out year over year what those required minimum distributions would be. And we take them out using the penalty-free withdrawal privilege. And in year 10, when the client turns 80, he finally decides, you know what, let's turn on that income stream. It would be $24,118. Or, in another way to look at it, 8.77% guaranteed minimum withdrawal benefit, guaranteed income stream for life, after taking out 10 years' worth of RMDs. Okay, the last strategy that I'm going to share with you today is S cubed. I call it the Social Security solver. Now let's tee this up. We have a husband, age 65, wife, age 62. They're both collecting Social Security to the tune of $30,000 a year, or $2,500 per month. Say the husband dies at age 65, and the Social Security payments for the widow are reduced to $1,000 a month down to $1,500, $25 down to $1,500. That's a pretty significant shortfall for the widow of $12,000 per year, right? But if you think about it, her life expectancy at age 62 is going to be 86. So over her lifetime, this tragic event is going to also be tragic in that she'll have a $288,000 shortfall of guaranteed income coming from Social Security. So we also use personal income annuity to solve for this. We use the S-cubed strategy. Personal income annuity, income tomorrow, we're using $275,000 as an example. Sorry about that. $275,000 is the starting premium. Maybe it's life insurance proceeds, other assets that she received as a result of her husband's passing. And what we do is we use the penalty-free to make up for that $12,000 per year shortfall through the penalty-free in our personal income annuity, allow that benefit base to roll up. And then when she turns 70, she turns on the GMWB of $18,382, significantly higher than what she would have gotten using the penalty freeze, and in essence, a 6.7% GMWB. Okay, so that is our personal income annuity. Next, I am going to leave you with one last product, which, barring our brand new product, Personal Retirement Choice, this has been our fastest growing product. And remembering our grid of how products fit together. Brand new product, I just reviewed that, and then I just reviewed our income product. This is our Personal Protection Choice. This is our multi-benefit product for your clients, all in one. And I think you're going to see why it's our fastest growing product. It's very, very consumer rich from a benefit perspective. We're providing guaranteed income, health care or personal care coverage or a rider that covers that, and the best enhanced death benefit in the business. You also have the ability, it's not one size fits all, so you have the ability to choose from 3 different options depending on what your client needs. They can choose income and personal care, income and family care, that's the enhanced death benefit, or all 3 forms of protection. What's great about this on the income side, does this look familiar? Income today and tomorrow? It's the same income story as our personal income annuity, up to a 45% bonus or a 14% simple roll-up for income tomorrow. And while the income is not as high on personal income annuity, it's somewhere in the range of 5 to 7% lower than our max income strategy. So the point there is it's not as high, but you have other benefits, but it's a very, very solid income stream that offers a number of other benefits for your clients. First and foremost, let's review the care protection. So you have income today or tomorrow, and then personal care. And just to keep it simple, if your client is confined to a nursing home and they've elected the care protection, we take that guaranteed income stream and we'll multiply it by 250% paid to your client if they're confined to a nursing home for 5 years. And essentially that's in any combination. So I get the question, well, what if it's it's a male, he's confined to a nursing home only for 3 years? Well, what happens? Well, once he gets out of the nursing home, it reverts back to the original guaranteed income amount. It's no longer $250, but then he has another 2 years in his back pocket that he can go to in case he gets sick and is confined to the nursing home again. I will also just mention on the application, we don't do any writing. There's no blood or urine. We do have some knockout questions on the application that you need to be aware of relating to the nursing home care. As I mentioned, the best enhanced death benefit in the market today, what we do here is it's a simple 10% roll-up up to age 70, and then it rolls up at 5% from 71 to 85, maximum of a 250% roll-up. The key here is that's a spectacular roll-up, but it's paid as a lump sum to the beneficiaries. So think about that. If the client dies, you are delivering a lump sum check that's rolled up very substantially to the beneficiary. So it's good for the beneficiaries in their time of need, but also it presents an opportunity for you to talk about different solutions, products, alternatives that you have to offer the beneficiaries. So let's take a look very quickly as to how PPC, Personal Protection Choice, works. Here's a client, Nancy, age 70. To keep it simple, she has $100,000, and she's opted for all 3 levels of protection. When she's 73, let's assume she turns on that guaranteed income rider. She'd be looking at $7,490 per year guaranteed for life. almost 7.5%. Say at age 77, something happens and she's confined to a nursing home. That number ratchets up to $22,043 payable for 5 years if she's confined to a nursing home. Also, she's elected the enhanced death benefit. Just to be clear, if she passes away at age 80 in the 10th year and has not taken any withdrawals, you'd be delivering a lump sum check to the beneficiaries of $155,000. So I shared with you the Social Security solver idea on personal income annuity. I think it's almost a stronger story with personal protection choice. So same scenario, husband 65, wife 62. There's going to be a shortfall if the husband dies in their Social Security payments. If the wife lives to life expectancy, right, it's $12,000 per year, and if she lives to age 86, there'd be a shortfall of $288,000. So let's see this idea with personal protection choice with an income and personal care protection. What does that look like? So similar to the other story, we make up the shortfall through taking out $12,000 penalty-free withdrawals out of the personal protection choice. And say in the 8th year, when she turns 70, she turns on a guaranteed income stream of $17,570. That's 6.4% guaranteed for life. And let's just say when she is 73, let's take this column, she is confined to a nursing home, right? We would pay per year $56,469 for 5 years if she was confined to a nursing home. If she needed home care, $39,528. The difference is we multiply by 250 here, and in this case we multiply by 175 for home care or not able to perform 2 out of 6 ADLs. So this concludes my presentation. I want to thank you for your time. Once again, we're very excited to launch our brand new personal retirement choice, best-in-class accumulation product, 15% premium bonus, uncapped strategies. We talked about some strategies there as well on the income side. There's a great income rider, but there's some great ideas using our penalty-free withdrawals to create an income stream for this product. I had one agent, once again, call this the mutual fund killer. I know some of you are out there are on a crusade to do 401k and IRA rescues. This might do the trick with the very high upfront 15% immediate return. We talked about our personal income annuity, our max income strategy, income today, income tomorrow, and those 4 unique sales ideas. The 4x4, the doubler, the RMD, and the Social Security solver. And last but not least, we talked about our fastest growing product, barring our personal retirement choice. That's brand new, and it's growing pretty quickly. We have our combo product that offers guaranteed income today or tomorrow, personal care in the form of a multiplier of 250 if the client's confined to a nursing home, and the best enhanced death benefit in the business today. So with that, I'm going to conclude my presentation. I know you know to call FEG to get more information. There's a Phoenix site up on the FEG web portal that you can get a link to our web portal from there. If you want to run your own quotes, you can do that. If you want to get at the marketing materials, you can do that as well. I would just urge you at this time, if you want to contact Phoenix, you don't have to. You can go through FEG. If you want to contact Phoenix directly to get some marketing material right away, have a quote run for you on any of these 3 products, this is the number to call right now, 888-794-4447, and option 1 gets you to our sales desk. We have a bunch of really senior folks that have been with us 13, 17 years on our sales desk that can help you out. And at this point, I just want to conclude, and I just want to thank Freedom Equity Group for allowing me to do this presentation today, and we look forward to working with you in the future on your crusade to guarantee income and provide great accumulation products for your clients who are looking to retire or currently in retirement. Thanks, and I'll conclude all my remarks.
Appreciate it. Thank you very much. I want to open up to some questions just to see if we've got any questions out there. It's rare. I've been in the industry a real long time, Ed. It's rare to have someone who presents as well as you have. So we're incredibly blessed to not only have Phoenix, but to have someone who can explain it so well. So again, thank you, and just want to make sure that if there's any questions. I'm not seeing. The only question is can I get this particular PowerPoint? This has been recorded. It will be on our website. And what you're able to do is the Phoenix presentation is available in your dashboard under Agent Training. And when you click on that, it'll pop up all the downloads of all the presentations that were done in Vegas, including the opening video if you'd like to watch that again. So every one of the presentations, including what Ed has shown you, will be on the website under Agent Training. So I don't see any other questions. Ed, thank you again very much. We truly appreciate it. God bless everybody. Have an amazing day. And we'll see everybody on tomorrow's Anaco training webinar, again, 10 a.m. Pacific Standard Time. Thanks, everybody. And Ed, thank you very much. Bye-bye, everybody.
The organizer.